Namaste, Sat Sri Akal and Adab. This is your host in those, Sunil Jhaveri, welcoming you back to another episode of One on One with Mr. Bond. In today's episode, we are going to be in conversation with Pratik Oswal, who's going to be talking about the NFO of Motilal Oswal Nifty India Defense Index. It's a very interesting index. I'm sure all of us are aware that it has delivered handsome returns along with the PSU index also. But we are going to discuss with Pratik whether the story is over. Is that defense story going to continue? And how do we take this forward for the investors at large so that, he'll be able to answer a lot, many more questions. So welcome, Pratik.
Hi, hi Sunil. Thanks for having me on the show. Looking forward to our conversation today.
An absolute pleasure. So, Pratik, if I say that defense story is not only defense story, it is a manufacturing story also. It's an import substitute story also. It's an export story also. And at the same time, it's an Atmanirbhar story also. Am I correct in saying what I'm just saying?
Yes, absolutely. Absolutely. I think it's a combination of all stories.
So now tell me, the elephant in the room is basically, is the defense story over? Because if you see in Nifty 50 TRI versus Nifty Defense TRI in the out of last 6 calendar years, Nifty India Defense TRI has outperformed Nifty TRI in the last 4 years. And that also by a big, huge margin. So is that story over?
Yeah, so, honestly, stories are never so, I think a story is normally a long-term story. I think, and stories tend to last longer than 3, 4, 5 years. The India story has been around for now 30 years. We believe that defense is going to be also a big story, which will last for a very long time to come. Honestly, I think, defense as a story has had obviously, there's been very little track record in defense. So that's been one of the pitfalls of this side, but we believe that going forward, if you look at India, our 2 biggest exports today are, IT services and pharmaceuticals. And we believe that manufacturing as a theme is going to be, as a house, we believe that manufacturing as a theme is going to be the third, maybe the biggest segment over the next decade. And we believe defense is, going to be a very crucial part about it. So we believe it's a very long-term story. Yes, I think in the short term, we've seen a lot of growth and a lot of profitability from the segment. But we believe that the number of companies in the segment are very small. There are only 15 companies right now. And we believe a lot more companies are going to enter the space. There's going to be a lot of export opportunity that's going to happen in the space. And we also, as a country, are the 4th largest spenders in defense.
Sure, so we'll discuss that also as we go along. But, this India growth story and this defense story and the manufacturing and the export substitute, etc., all the stories. So it's not captured in the Nifty 50, right? It's not captured in the large cap space. It may be captured in the mid cap and the small cap space. So it's wrong to, compare the Nifty 50 with naturally the India defense Nifty India Defense TRI also.
So the problem is that, generally when you talk about thematic indices, you talk about its comparison with the broad-based ones.
Correct.
And that's because, honestly, it's very hard for anyone to have a broad thematic index, because a broad thematic index is the Nifty 50. So,
Correct.
100. So I think the natural comparison is to essentially tell people that, by betting on a sector or a theme, you are taking more risk than betting on, say, a Nifty 50 or a 500. But there is a good element of overcompensation in terms of returns, by taking that extra risk. So I think even in this sector, obviously in this sector, the last 5 years, there's been more than enough overcompensation in terms of returns, which will obviously not continue. But we believe that any sector, any thematic or anything which has the potential to do well financially is compared. It's like comparing your liquid rate to a fixed income instrument or a bank rate FD, which becomes the cost of capital. I think in equities, Nifty 50 is the most basic cost of capital that people need.
No, so what I was trying to say, I'm not saying that you should not be comparing Nifty 50 as the main index. What I'm trying to say is that none of the stocks of the defense are represented in Nifty 50.
Oh yes, yeah. I mean, and even if they are, it's a very small portion. So I completely agree with that. I think Nifty 50 is, I think to play the sector, it's very hard to play because it's a very small sector. It forms a very small niche part of your overall, portfolio if you invest in Nifty. So I do agree. I think to play these sectors and themes, you have to go beyond Nifty 50 or look at, these sort of funds, for you to really play the story.
Sure. So now let's build the story. Let's go first of all to the global defense spend and the defense industry, and then we'll come to the India story also. So in the global context, there are reasons for rise in global defense spending, right? So if you can just identify this maintaining peace in the region, increase in conflict, etc., and the geopolitical issues. So these are the reasons why the global defense spending is going up. If you can just throw some light on that, and I think this is going to continue. It's not going to shut in a hurry.
Yeah, so I think global defense spending has been increasing year on year over the last few decades. I think since the beginning, I would say, since many decades, I would say, we believe that defense has been increasing globally over the last 10 years. It's been about 3%. But what we've seen is that there has been an increase in conflict that has come in the last 2 years with the Russia-Ukraine war, with the war in the Middle East, with geopolitical tensions between countries. So we believe that defense as a spend has actually gone up exponentially in the last couple of years.
And last year, it seems it was almost 20%.
Yes,
it was jumped up by 20% globally.
Yeah, so I think some of that incremental spend is going to come to India in the form of exports from India. India obviously is a very small player today, but the government is touting its our internal sector to become a lot large. We're already exporting to 75 different countries. Our defense exports have increased 3.5 times in the last 5 years. So it is obviously a very small market. But for example, last Friday, I think last Friday was, maybe maybe the 17th or the 18th of this month. The ministers announced that they have a target of 50,000 crore worth of exports to happen by the end of the decade, which is a huge number. So, we believe that the global marketplaces are very large, and India will hopefully play a very large role in the times to come.
So if you see the world's largest defense spenders, the US, of course, is the largest, then they're followed by China, then, of course, Japan and India, and then, of course, Saudi Arabia. So these are the five big countries with big spends as far as the defense is concerned. So if you can throw light on this in terms of, are these countries likely to continue to increase their spends, or there are other countries beyond this who will also be adding on to the defense spends?
Yeah, I think most countries would spend on defense. I think what we realized from the crisis that we've had in the Middle East, Russia, Ukraine, and also China, Taiwan, is that most countries would want to have enough sort of domestic firepower to avoid any sort of conflict in the future. I think the biggest risk that a country has today is any sort of attack from any other country, larger or smaller. So I think defense spending becomes very important to maintain peace and to also ensure that countries sort of move harmoniously as we move on. So I think in that sense, I think India is number 4, and India is growing at a much faster rate than the rest of the world. So yes, there might be a point in time where India becomes number 3 or number 2. But yes, I think it's spending at a much more faster rate because also India is growing at a much faster rate. So its importance in the world is also increasing a lot. But we believe as a spend, most countries have a defense spend, which I think is important, and that will also continue to sort of increase over time as countries get bigger.
So now let's come to the India story on the defense side. We have also grown substantially. So from budget has increased from almost 210 lakh crores to 500 lakh crores. And India's defense spending increased to the highest pace of 10% versus the global spend of 3%. And India has increased their allocation to funds for modernization of armed forces. So it's not only towards the salaries, etc., but it is towards the modernization of armed forces also. So if you can, and if you see the breakup of the budget of the Indian defense spend, almost $19.7 billion is allocated towards capital expenditure.
Yeah,
So
so
if you can throw light on that,
yeah, so honestly,
that's a huge number, by the way.
yeah, it's a very large number. So 10% growth on 10 versus 10% growth on 1,000 is very different numbers. I think defense spending is increased by 10%, but the budget allocated, it's a very heavy item in the budget. You're looking at 13.2% of our entire budget for the year. Our budget is about 45 lakh crore for India. And out of that, 13% is currently, which is 5 lakh crore, allocated towards this. So it's a very heavy item, which is growing at 10%. So again, I think and a lot of this is actually going towards imports from Russia, France, and the US. So I think this itself lends an opportunity for Indian companies to satisfy the amount of spend that we have on a year-on-year basis.
So basically, we are importing currently from Russia, France, and USA. So these are the three main countries where India is importing from. So India has a current account deficit on the account of crude oil, which is the major import, the gold, and I think the defense spend also is one of the major concerns and major contributors to the current account deficit. Now, with this Atmanirbhar, the export thrust, the import substitution, etc., how much of that will have positive impact on the current account deficit for the Indian context, and how much positive will it be for the markets going forward because of that?
Yeah, so I think there's two legs to this. It's a very good question. Currently we are dependent on imports for our defense needs, but there's two legs. One is obviously by local manufacturing. You are obviously have a potential of making a deficit into a surplus.
Absolutely.
Potential of reducing. Already the plan is to reduce imports by 70%. Maybe over the next by the end of the decade. But also, I think the plan is to increase exports. So I think what we expect from this industry and what the government expects is that by having good country-to-country relations, by having very good international relationships with our partners, to make this sector into a positive environment where we have positive forex flows coming from all the countries, from all the world. So that's the opportunity, and that's what the stocks are also rallying about.
Awesome. Now tell me, India's defense challenges. So what are the defense challenges which India is facing? Of course, the large land locked conditions and the neighboring countries, which we have, constant tensions with the neighboring countries, and delays in modernization and naturally ongoing terrorism. So if you can throw light on each one of them and how this is an opportunity for India to capitalize on to increase our defense.
Yeah, so these are some of the basic sort of issues that we're having right now. So
correct.
Even though India is a very peaceful country that way, we don't have a lot of issues with any of our partners. We have remained peaceful for a very long time. We still have obviously ongoing issues that people don't talk about, and this includes border issues with China, includes delay in modernization. A lot of our defense is very archaic, very old. We have had I think terrorism issues, especially in the north. So I think there are issues that are currently also happening all over the country. But again, the major spending tends to be on making sure that there is consistent or continuous peace with our neighboring countries and with larger countries also, by ensuring that we are properly armed, not to defense but also to retaliate. Defense has two legs. One is to defend your country, and the other one is to obviously retaliate in case someone attacks us. So you need to have strategies in both legs, and I think both require heavy investment when it comes to defense architecture.
Now, what are the key industry growth drivers? So if you can just briefly highlight on what is defense procurement procedure, then defense offsets, then equal field for private companies, and naturally the Atmanirbhar provisions of the government.
Yeah, so I think the defense as a space the landscape has changed a lot. At least in the NDA government that we've had, the procurement process has become a lot more streamlined. It's become a lot smoother, and the entire process of buying in, spending, this has become more sort of transparent. So I think overall what we've seen is that the entire process becomes streamlined. There's less red tape and bureaucracy, which people knew about it back in the day. So that always come down. The second is again, I think as you said, Atmanirbhar is the trend of the is a theme of the season. Make in India, self-reliance is what the government is very focused on, and we want to become a superpower in manufacturing, and defense is one type of manufacturing which
And that's a very interesting thing where you become Atmanirbhar on defense story also, because you can't depend on
absolutely.
outsiders to make you Atmanirbhar on your own protectionism.
Yes, absolutely. It's the self-reliance is not only on our own money and own capital, but also on our own needs as a country. So if tomorrow, something happens and we suddenly want need demand from, for certain type of defense equipment, the country that we import to shouldn't take sides, So I think in that sense, self-reliance is a very good strategic move, in terms of making sure that we have the right infrastructure to protect ourselves in case there is some threat. So I think that is a big, obviously, big use case, and I think also defense offset. What that means is that, for example, in auto space, in the automobile space, if for example, if Tesla wants to come to India to sell cars, the government has said that you set up a factory and you do some bit of manufacturing here, and that is a sort of a offset that companies have to do. They have to rely on local manufacturing, local components for some of their vehicles. Defense has very similar offsets where if a global company wants to supply to Indian government for defense needs, they have to come out here and they have to procure from Indian companies at least some part of it. I think that's also leads to more job creation and transfer of technology. But that is also obviously a big opportunity for us to make sure that if we don't have the specialization, we get the right foreign players and also ensure that that specialization gets utilized here by setting up a unit out here. So those are obviously big advantages in this space. And lastly, forex. I think big benefit would be creating jobs, technology, but also our foreign exchange needs will also go down as we export more and more of this externally.
Import substitutes and exports. It's a double positivity as far as forex is also concerned and CAD is also concerned. Now tell me, the addressable opportunity for Indian defense players is humongous. So defense exports grew by 334%, sorry, over the last 5 years, and India exports to over 75 countries, as you mentioned earlier. Now, change in the government policies which aims to reduce imports by 70%, which is like a humongous number which they are aiming for. And the spending which we are talking about in terms of exports as well as the domestic capital spend is only growing, as you can see from this chart. So what is the addressable opportunity in the Indian's defense for the Indian defense sector?
Yeah, the upside is really limitless, to be honest, in terms of addressable opportunity, especially if you're looking abroad. If you look at the largest company in the world, most of them are in the US. And if you look at the size of those companies, even though people think that the largest company in India is about 3.5 lakh crore in sort of market cap, that is like minuscule compared to the largest company in the US or in other parts of the world. So the headroom that we have to grow from here is very high. So these companies can easily be multiple times of their net worth or their market cap today if they're able to address the global market size, which is also growing. And there obviously you have other players who are very dominant. So we believe that exports itself can be a much bigger opportunity. However, currently most of the order book is domestic. And I think over time, as we're able to fulfill domestic orders well, exports will be a huge focus in the times to come.
So are these companies more in the mid cap space or in the small cap space at the current juncture?
So I would say about three. If you look at the overall, the index today, so the defense index, which is all listed defense stocks, approximately 40% is large caps, 20% mid caps, and 40% small caps. So that's how the
40% is still in large cap?
Yes, 40% of the index is in large caps. So 40, 40%. Okay. So it's still a large and mid cap heavy index, but you have a long tail of small cap stocks.
Sure. Now tell me now, if we look at the valuation matrix once again, the price to earning of the Nifty India Defense is at almost 58. The price to book is almost 15.5, and dividend yield is a 0.44. From here on, how can investors make money?
Yeah, it's
with these kind of valuations.
Yeah, so valuations are obviously expensive for the market also, and I think especially for defense. But you have to factor in growth. a PE of 30 standalone is not a very good measure of, I would say, value. It's a valuation compared to the market. You have to look at relative valuation, but you also have to look at growth. I'll give you a simple example. A stock with a PE of 30 growing at 10% is very expensive, but a PE of 30 for a stock growing at 50% is cheap. So essentially, looking at a sector which is growing at a very fast rate. If you look at the PAT growth, the EPS growth of the sector, it's humongous. Most of these companies in the index have doubled or tripled the PAT in the last 3 years. So the growth rates that if the sector is able to, and also the order books are there. So the sector, if the companies are able to execute and are able to grow and fulfill these orders, then you can really expect the similar growth rates as what we've seen in the past. And in that sense, obviously, PE may not come down. PE might go up or might be stable. But again, as I said, I think if investors are expecting similar growth rates, then it may not be that expensive. Next, and also lastly, this is a long-term opportunity. As a AMC, we would not recommend this fund for any investors who are looking for a quick buck or who are looking for a couple of months of investment. For us, sector funds and thematic funds are for risky type of investors. And for any investors who are coming in, we would recommend taking a minimum 5-year view. I think if you're taking a 5-year view on the sector, 5 to 7 years, we're very confident that this sector will lead to wealth creation, especially looking at the valuations today. So I think valuations, yes, are elevated, growth rates are high, but I think investors need to take a long-term view on this for them to really create wealth.
I'll flip the questions on its head by saying that, since though it is a thematic fund, it still is into the manufacturing space. It is still into the export-oriented phase. It is still into a import substitution phase. It is into Atmanirbhar phase. Can someone treat it like not a thematic fund, but a manufacturing company, manufacturing theme, which can be on an ongoing basis, deliver returns on for the investors? The question why I'm asking you this question is because in 2007-8, the infrastructure theme became very popular. And all of a sudden, as we know that since then to now, it's not come back in terms of the returns. Now, all of a sudden, maybe they'll be coming back. So should the investors treat this as a thematic fund, or can they treat it like a fund which can be an all seasons fund because of these 3-4 encompassing overall themes on top of that defense theme?
Yeah, so I think it really depends on how you define thematic, because theme can also be something that is very short-term led. Today's theme is that, tomorrow's theme is something else. But theme can also be a theme of investing. Say, I think people tend to see thematic funds as cyclical funds. People tend to see thematic funds as funds where you have to time it. I do agree, thematic funds, if you really want to create wealth, if you really want to maximize your wealth, timing really works well from a historical perspective. But honestly, I have never met anyone who's timed it well. But I do believe that thematic funds work very well if you have a long-term, I think if you have a long-term view on that theme or that sector, if you're willing to, handle the volatility that comes with thematic fund, I think it's a great investment. If you're looking at say banking as a theme, anyone who was bet on banking 10 years ago has made incredible amount of wealth, even though the sector is like super cyclical. And we believe that this sector, the problem is we don't know if the sector is cyclical or not because there's not much track record. We don't know how the sector will do in a bear market versus a bull market versus a recovery market. It's only a 5-year track record. So I think that remains to be seen. But we believe that from a house perspective, it's a theme that is here to stay. The government obviously needs to spend on defense. That's not going anywhere for many years. And the good thing is that the government is also the new government in place today, which is sort of coalition. They've also maintained that they will stick to the same principles as they did in the previous. So I think that has given a lot of relief to investors, which is also why this may be a good investment.
So can we treat this thematic fund or this theme little differently from the other themes in terms of volatility? Because of volatility can be because of two things. One is that the theme goes out of flavor, like what happened in pharma during COVID period. And the other one is the valuations are extremely expensive, and that's the reason why it becomes volatile. So this theme, the way I perceive it and the way we have discussed it currently, is that it's a long-term theme with various positives embedded in it. So can this be a thematic fund which will have less volatility because of its theme, but maybe because of its valuation currently, or on an ongoing basis, as you are rightly saying, that the earnings growth is there, so the valuation also is not really a major concern at the current juncture?
Yeah, exactly. So if the theme is, if I think if the earnings growth sustains, which everybody expects it to, you can expect wealth creation in this theme. Unlike a lot of other themes where it is dependent on cycles, we don't believe this theme is dependent on cycles. So
That's what I wanted to ask you.
in that sense, that might be true. However, we don't have the track record to see it. So hopefully we'll figure it out as we move on over the next few years. But yes, I do. We do sort of expect this to be a and also the index is very concentrated. Also, there will be no churn in the index. There is no rebalance happening. It's 15 stocks, and I think in that sense, it's a pretty
There are
good
only 15 stocks in the index.
15 stocks, and there's no and as the entrants grow, they'll keep on getting added to this index. But the good thing is that it's a very low churn. Not much happening in the index. So what you buy is what you get. The inclusion criteria is pretty robust. You have to be part of SIDM, which is Society of Indian Defense Manufacturers, and at least 10% of the revenue comes from defense. So very good, robust in terms of how the index is constructed. And we believe that hopefully over time there'll be a lot more stocks that come into this index. But yeah, I think we hope that this sector is non-cyclical and the government is able to continue on making progress as we have seen the last 5 years.
So can the investors make it a core fund or a satellite fund?
We still wouldn't recommend it, to be honest. I think still wouldn't recommend it to be a core. I would say once we have more data points, maybe in 3 or 4 years' time, hopefully we have data points, then we could say that. But right now, it's just too early to say, how to treat this. Right now, this is still a part of
This is the first index fund, right, in the country?
This is our first thematic index fund.
No, the defense. Is this the first India?
This is the first index fund in India. Yes.
Okay, great. So, and then I think the NFO is closing on 24th of June.
Actually, it's been extended. The NFO will be closing on 27th. So we've had a lot of requests from our partners that this NFO be extended. So we've
A lot of interest.
To 27th. So that's and I hope for a lot of maybe we've already had a crazy amount of performance, crazy amount of traction in this fund. It's the largest ever NFO that we've done in the passive space so far, and we still have a week to go. So we're expecting big numbers from this.
Sure. And at the end, I always ask the fund managers the one last question, which is the global macros. How do you see the global macros, especially in the US context, and where are they headed? Are they headed towards the recession, or they are going to be in a soft landing situation?
So US, to be honest, the entire discussion of soft landing and recession is now sort of not there. We believe that so there's two things. One is obviously the US investment market, which is the S&P 500, which is far, far, far away from base reality of what you see in the economy. S&P 500 is all AI stocks now. So
absolutely, 7 stocks are driving almost 40% of the
investing in AI. Basically, you're not really investing in the economy. So I think the economy and the index is very much different from each other. And we believe that the economy itself is the fact that interest rates. So the biggest and what's really weird is that people, despite of higher interest rates and despite everyone expecting 4 to 5 rate cuts this year, we haven't had any. And despite of that, the markets are rallying.
Markets are rallying.
So I think normally this was very unexpected, and the markets are rallying despite high interest rates, which shows that a lot of fund managers are getting a bit risk averse in the US. They feel valuations are stretched. They think valuations are a dip obviously this AI stocks is what the market is valuing, not really the economy. So if this AI stocks are able to deliver the sort of earnings and expectation, then you can see higher returns. But yes, the markets are really favoring the top 10 stocks. And I think whatever happens in the top 10 stocks is what you'll see in your investments So again, not really attached to US as much as it used to be. But in general, I think the economy is a lot more stable. Things have become very expensive, to be honest. So there is a huge wealth gap. Things have become very expensive. Inflation is really hurting the common man out there. But the propensity to pay is also gone up significantly. Wages have gone up significantly in the US, which haven't happened globally. So, normally what you have is, office going people have their wages increase, but for the first time in many decades, you've had wages increase across all spectrums, which I think has been good for the economy, and that is what's helped. I think a lot of these guys to stay afloat. So I think overall, yes, people are optimistic, but a lot of the optimism is now on the basis of how these companies are going to deliver in terms of their impact and their R&D, and how AI is going to transform these business models.
Sure, great. Now, Pratik, last thoughts on the Indian markets for the Indian investors. The election results are over. Modi 3.0 or NDA 3.0 is already come into place. Have the FIIs taken a cue, and are they going to come back in with a big bang going forward? And should we expect much more liquidity from the FII side besides the DII, which is continuously happening?
Yeah, so DI will continuously happen because DIs are getting so many flows. Mutual funds, and a lot of these corporates, family offices, institutions, everyone is putting lots of money in the equity markets.
SIP flows.
SIP flows are very strong. The sort of appetite that we are seeing is incredible. 4.5, 5 million new demat accounts being opened every month. So it's been, and even liquidity. I'll give an example. We launched a microcap fund last year. I was here with you back then also, and since we launched the fund, I'm not sure we were responsible for it, but the liquidity has gone up 3 times in that space. We were looking at closing the fund at 400. Today the fund is at 1200, and we have ample liquidity. So I think liquidity has improved a lot. There's been, and most of liquidity driving factor has been local investors, retail investors. So
and they've become smarter. They were the ones who had actually invested on 4th of June rather than exiting.
Yeah, I mean, you'll be surprised at the number of transactions that we got in the 4th of June, or the industry got. So
amazing.
On the sidelines, waiting for the markets to correct, and if it does, then there's going to be a flood of money coming in. So we believe that retail investors have come in a very big way. And India, 10 years ago, was held by FIIs. We were held at ransom, I would say, by FIIs and their flows.
Correct.
Today, FII is a very small part of the market. So I think in that sense, India has become a lot more independent. We became independent from foreign guys, I would say, over the last.
I think as Niket said that, now the 84% of the Indian DII is much stronger than the 16% of FII.
Absolutely, absolutely. So we're not dependent on large inflows and outflows. Markets become more broad-based. Companies have become bigger. An average small cap company, we spoke about it last time, has gone up 5x. When we did the small cap index fund, again, we had some interaction back then, 2015. And an average small cap company was 4,500 crores in market cap.
Today, the average is about 10 to 15,000 crores now.
No, today is 25-30,000 crore. An average small cap company in India is 30,000 crore. Wow. So that's how large the opportunity is. The biggest, average micro cap company today is, I think, upwards of, 5 to 6,000 crore or something like that. So I think it's very, very large. So the base has become very bigger. Indian companies have become a lot more.
No, but one which is very, very contrasting and very stark comparison is the two stocks of US. The biggest stocks, their market capitalization is larger and higher than the Indian stock market, the entire stock market. So, India has lots to catch up, and there's only room for growth going forward.
Yeah. No, honestly, it's very hard to compare it to a company which is, making, not even making, they're designing chips. NVIDIA is not a manufacturer of chips. They design them. So I think it's crazy how a design company, or obviously you have to be super cutting edge, is able to be of so much value. It just shows the amount of demand, and in fact, the only capacity constraint right now that the world will see is compute power. So I think that's the only and I think that's where a lot of the focus. So the biggest electricity consumer people see over the next decade is going to be compute. So that's the amount of I think focus that's been happening in this space. So I think a lot of opportunity there, and I believe even in India, this is a huge opportunity for corporates to transform their organizations, become a lot more. So overall, I think it's a good trend to harness. Obviously, so far it's very early days, but the amount of infrastructure that's been currently being set up globally, especially in the US, is quite large. So this is going to be a very big thing.
Thank you so much. Thank you, Pratik. It's always a great pleasure speaking with you on not only your NFO or a scheme specific, but various topics across the board. And I'm sure the investors and the viewers also will benefit out of this. All the best for a very successful NFO. And I know that Motilal Oswal AMC does not come out with NFO just as an asset gatherer. They always come out with an NFO because they believe that there is a story behind it. So all the very best.
Thank you so much, sir. Thank you. Thank you.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.